Welcome to the Westside Investors Network, WIN, your community of investing knowledge for growth. This is the Real Estate Professionals Investing Podcast for real estate professionals by real estate professionals. This show is focused on the next step in your career, investing. Thank you for listening, and please, if you like our content, rate us on your podcast provider. Just a quick disclaimer, the views and opinions expressed in this podcast are for educational purposes only and should not be construed as an offer to buy or sell any shares or securities, make or consider any investments, or take any other action.
Welcome back to another episode of the Deal Deep Dive segment on the Westside Investors Network podcast. I'm your host, Trent Werner. In this segment, our featured guests will share their unique stories on a specific deal they've invested in. We will dive deep into finding the deal, financing the deal, writing an offer, and the due diligence. Do us a solid and smash that subscribe button, leave us a rating, and share this episode. And now, let's dive deep. Welcome back to the WIN podcast. I'm your host, Trent Werner. On today's episode, we are joined by Ben Reinberg, the founder and CEO of Alliance Consolidated group of companies. Alliance manages investment funds across different real estate asset classes and focuses on medical office investments. Ben is considered an expert in medical office and commercial investments as he has years of experience helping investors achieve their investment goals. We're also going to talk about Ben's new book, Hard Assets and Hard Money for Hard Times. In this book, Ben lays out a blueprint for how investors can accumulate, grow, and defend their wealth for future generations. We also touch on certain questions and research topics that investors should be doing when they are searching for experts in these certain fields. Now let's welcome Ben Reinberg. Ben Reinberg, the founder and CEO of Alliance, joining the WIN podcast today. Ben, thanks so much for being here. I'm excited for our conversation on not only Alliance and what you guys do, but also your new book coming out in about a month from now. Ben, thanks for joining the show.
Thanks, Trent. I really appreciate being here. I look forward to adding a lot of value to your audience and talking about investments and how to build hard assets for your audience and how to really maximize the wealth.
Now, I think this is the first time I've had a TV show host on the WIN podcast. Do you want to share what TV show you are on and what that TV show is about?
So we started a podcast called Ben Reinberg, I Own It, and we did a tremendous amount of podcasts over the years. And we realized that it'd be more beneficial if we have a topic. So we turned it into a TV show, our podcast. And so the first season, Trent, is called Leverage. It's leverage from all different walks of life, different types of leverage. Then secondly, what we decided to do for season 2 is called Obsessed, because in order to be wildly successful, you have to be obsessed. Yep. And so it'll be streaming soon. It's going to be downloading soon and streaming soon on a bunch of different networks and streaming across the world. And we're really excited about it. It adds value. It's a great call to action. It will help investors learn. It'll help people learn business. And we have wonderful guests. We interview about 13 guests per episode, and it's all about the topic for the season.
Very nice. Well, we'll definitely stay tuned and be on the lookout for that. Now, Ben, tell me what Alliance does. I know you guys are in the real estate space, investment space. What does Alliance do specifically in real estate, and how do they help, or how do you guys help investors grow their wealth?
So Alliance is what we call a fiduciary capital, Trent. We raise capital from high net worth individuals as well as family offices. And what we do is we're a fiduciary of that capital. We invest, we're experts in office, industrial, and retail. We just opened a multifamily division, and because we see a lot of opportunity in multifamily coming, and we can explain that. We are one of the leaders in medical office investing. So we have a new fund that we've been raising money for, the Alliance Medical Fund. At the end of March, we'll have 7 assets in the fund. We have a new asset we're acquiring this month, which we're excited about. And so the fund's doing well, great assets, great cash flow, pay between 6 and 8% current return. And then you get equity when we sell the fund or individual properties, and along with tax benefits. So we've been doing this, Trent, for 3 decades. And we have 200 plus years of leadership team experience outside of Ben Reinberg, myself. And so long story short, we have a great platform. We give a 7-star experience to our investors, and it's white glove service.
And for these funds that you guys manage, are they evergreen or do they have a expiration date on them?
Well, there will be an expiration. We'll sell them. We'll sell it within 5 years. Usually there's an expiration date, and we
Got it.
sell the fund usually within 5 to 6 years.
That makes sense. So Ben, you mentioned something about, I guess, future opportunities in the multifamily space. I feel like the multifamily, commercial real estate in general is kind of a topic around the country right now. Multifamily in what, I mean, that's our focus. So what I've seen is there's a lot of people that are, I don't want to say scared of multifamily, but they're having a hard time finding good deals and good opportunities in the multifamily sector specifically. So when you say that there's opportunity there, what do you mean by that?
Well, there's trillions of dollars of loans coming due in 25 and 2026. And that's going to create a lot of opportunities, especially in the multifamily space. We know sponsors and colleagues of ours that put financing on that's coming due. Now, in a rising interest rate market, you see what the 10-year is doing, which has a strong foothold in the multifamily space. We've seen that there's going to be some sponsors that are going to give back properties or be forced to sell their properties. So that's what I mean by good opportunities. We see some good buying opportunities in the multifamily space.
Have you looked or researched at all about potentially placing funds in a, I guess, to save deals? I can't think of the name off the top of my head, but like Lifeline Capital, where people may be struggling in their deals and bridging that gap to help them
Yeah,
get
I
through.
mean, we opened a hard money lending division for commercial real estate because of the lack of liquidity in the market. So if people need a hard money loan, we're looking at those opportunities and seeing if it fits our box. We do low leverage, high money lending, hard money lending.
Okay. And then you guys have in-house asset management. So I'm assuming these buying opportunities would just kind of fit right into your guys' portfolio then.
That's correct.
And uh, do you guys have any current or multifamily assets currently?
No, we just opened the division in 2024. We should be buying our first round of assets shortly, and we're really excited about it.
Okay. How does your current investment portfolio in, medical office and all these other niches that you focus on translate into multifamily?
Well, we're opportunistic, and so we understand how to manage multifamily. We have people that have managed multifamily for years that have joined us. We also opened up a division where we have a gentleman running it who's been doing it for 25 years. And so we're fully integrated to take on a multifamily property and manage it very well.
And then from an investor, limited partner, or investor standpoint, I guess what type of investor would fit your new fund in multifamily, and what type of investor is fitting your current funds, or are they the same person or same
Same person.
avatar?
They want the same avatar. They want to diversify. They want tax benefits. They want current cash flow, and they want profitability. And that's what we offer.
Right. And do you think the returns on these different asset classes are in the same ballpark?
It just depends on the risk. And so medical office is very conservative. So we'll probably hit a high teens IRR. Track record's 24% IRR, but that's what we're looking at. Trent, one of the other things in multifamily, it's conservative as well, but it just depends on the asset. We're buying existing assets with cash flow.
Right. What about value add
Mhm.
multifamily?
Right.
Do you guys
Well,
do you guys do any of that, or will you guys do any of that?
yeah, I mean, we're looking at core plus and value add type multifamily. That's part of our acquisition criteria.
Okay. Because that's in at least in our research and our underwriting right now, it seems like there's still a pretty decent spread in the bid ask on some of these value add multifamily deals that we're looking at. And I don't want to say it's impossible, but it's definitely harder to get some of these deals to pencil from what we've been seeing in our underwriting.
Yeah, I mean, multifamily is tough because a lot of people put financing on these deals and the 10-year is moving and there's a gap between the bid and the ask. And so you can't make it work. And so, assets have devalued with rising interest rates. And so that's why there's going to be opportunities because there's going to be opportunities people are going to have to sell.
What do you see the market doing when that time comes with all these trillions of dollars worth of debt coming? Is it going to be just a full on fire sale panic mode, or
No,
is it
there'll be some workouts. There'll be people that will sell. There'll be people that have to sell. There'll be some lenders that take back properties. There's different product type, and you have to pick and choose what you want to buy if where the opportunities are.
it's interesting that you mentioned lenders taking back properties, because I've seen it already on a few different news stories that I've read where I don't want to say it's predatory lending, but it seems like these lenders are taking back some pretty good assets at really good prices for themselves. Do you think that's going to be the majority of what goes on?
I wouldn't speak in a box. I mean, when you say majority, what does that mean?
I guess, is that going to be, do you think there's going to be more of that than people selling before it gets to that point?
Well, I mean, I don't know if that's the case. I think what lenders are going to do is they're going to appraise out their properties and see if they have equity in the properties, and then they'll make a prudent decision what they want to do.
Right. It's just from the articles that I've read, it seems like some of these lenders are adding some assets into their portfolio that are going to perform pretty well for them.
Yeah, I mean, look, if they see an opportunity and they could take back a property and there's equity in it, they might take advantage of it.
Yeah.
It just depends on the lender and what they're borrowing and what's internally going on at the bank or the lender.
Right. So Ben, you said before we start recording, you said you have a new book coming out.
Mhm.
It's tailored to limited partner investors and people wanting to place capital. Is that correct?
Yeah, I mean, it's really for anyone. You could be broke to a billionaire. It's called Hard Asset, Trent, and Hard Money for Hard Times. And I want to write this book because every day I'm asked to take a look at someone's portfolio and give feedback on investments or ask, how does someone get into real estate, especially commercial real estate? So it's been going on for decades. And I quickly learned that most people do not understand how to generate wealth. And so I took a step back and I said, well, they don't understand assets. They don't understand money and time's your most valuable asset. And these are all tools to build wealth. And so I also realized that most of all people didn't understand how to invest in medical properties. So I was determined I'm going to be the go-to expert in medical real estate, which I am. And I was surprised how many doctors didn't know about investing in medical. And so once I wrote the book, I need to realize I need to take another step. I had to go a little bit deeper and further and teach people how to build a hard asset empire. And so the hard asset empire is a place where someone can generate, retain, defend, and compound their wealth. So once you start generating assets, how do you defend them, compound them, and grow your portfolio and make sure you could generate for future generations as well? It's generational wealth. So I created this vehicle in the book to help people build and create generational wealth for their families. And to make this easy, Trent, for everyone, doesn't matter what level you're at, I provide a hard asset blueprint in the book.
And now here's a word from our sponsor.
Get things done while you're on the move. Learn more about working with a virtual assistant through Offsite Professionals. It's a great way to get all the things done that you need to get done. Have freedom in your time and streamline your life by automating your business. Stop spending time on the tasks that you can delegate and start spending more time on your superpower. Call us today at 503-446-3177 or visit our website at offsiteprofessionals.com.
Uptown Syndication is now offering a syndication coaching program for you to take your real estate portfolio to the next level. This is your opportunity to have experienced syndicators, AJ and Chris Shepard, coach you on your way to controlling your real estate investing future. Our coaching program will provide you with the tools and framework needed to begin syndicating real estate in your target market. Go to uptownsyndication.com today to learn more.
And so why do hard assets matter, right? Like why pick up the book? Why does it matter? Well, in a world of uncertainty that we've lived with, economic volatility, inflation, if you think about inflation and geopolitical volatility, makes traditional investments riskier than ever. And so what do hard assets provide? Stability, predictability, and long-term wealth. Well, hard assets could be commercial real estate, could be real estate, could be gold, silver, platinum, cryptocurrency, stocks, bonds, the list go on. And throughout history, I realized the wealthiest individuals and families secure their legacies through hard assets. Like I mentioned, real estate, precious metals, and private lending opportunities. And so what's the problem today, right? We ask, like, what is the issue going? Well, most people don't have a roadmap of how to build and develop this hard asset empire that I've been able to do in my career. And they lack the methodology, the strategy, and the blueprint. And that's where this book comes in. And so, it's this visual framework that I created that simplifies complex financial concepts that go on in our life and into actual steps to build, grow, and protect your wealth. And so it's for everyone. That's what I want to do. I want it for everyone. You can take off your bookshelf and use it every time you need it and have to look at it. So whether you're an aspiring investor or a seasoned professional, this book is for you. It gives you all the tools to diversify and secure your portfolio, to give you security. And it's also empowering independence. I want to empower people, Trent, that the methodology allows realtors to like take control of their lives, their financial destiny, rather than rely on their financial advisors or uncertain markets. And so people ask, like, why do I need to read this book, The Hard Asset Blueprint? Why do I need to really take down this book and do this for myself? Well, you want a crisis ready strategy in your life. You want to weather economic downturns and bank collapses and market crashes by anchoring their portfolio in tangible income producing assets. That's what I teach. And I give a personalized roadmap. It's not a theory. It's what's been proven over time in my career as well as my colleagues. And it's proven tactics, like I just said. And so if someone's looking to create multi-generational wealth, that's why I wrote the book. And hard assets are timeless, and they provide opportunities to pass on wealth to your kids and your family. And a lot of people want control and security. And that's why I've been asked for numerous decades, Trent. And so to have freedom and peace of mind and knowing your wealth is secured by tangible assets, because we talk about the blueprint looks like a fortress. It looks like a castle. So you have your capstones, your keystones, your walls, you have a floor plate, that's your foundation, you have vaults. Like, no one talks about security and data. We do. That's one of your vaults, is how do you protect your assets? How do you protect your data? So we allow people to think, and I want people to think. So why is this book different? Why has it never been done before? Because it's something that people don't want to talk about in detail, I feel. And so it's visually engaging and actionable. That's why I did it. And that's what it's great about. It's accessible to all, like I talked about, no matter what level of life you're at. And it's a true companion guide because it's not going to be a one-time read. I wanted to make it evergreen. And it's a resource that readers will revisit as they build their empire, adjust strategies, amend them, compound them, and grow in their portfolio, learn how to defend them as well. So you're going to have to constantly bring it off to be able to revisit it frequently. And that's what I want. I want people to be able to use it as a tool to save them time and increase their financial wealth. And so, if your listeners out there and you just feel tired of uncertain about your financial future and you want to take control and build something tangible that lasts, that's what this book is about. That's why it took me a year to write, Trent, and I'm very proud of it. Launches at the end of March, and everyone's blueprint awaits for them. And people say, well, I don't have money. When do I get started? You get started right away. You start building hard assets to build wealth. And I don't care if you have $10 in your pocket. You figure out, how do you generate wealth and invest? Maybe it's a stock, a bond. Maybe you can invest in other crypto or whatever you need to do. Pull that trigger and start building. Don't wait. And, empires aren't built overnight. It's with the right blueprint. It's one step at a time. It's one brick at a time. And then as you keep building, it's inevitable that you'll build your empire. But you have to be consistent. You have to focus on your niche. You need to invest in smart money. So, for example, I'm a commercial real estate expert, Trent. That's what I do for a living. That's my bailiwick. And if that's my bailiwick, if that's my focus, I'm going to invest in other people's smart money to build my empire. Cryptocurrency. I'm going to invest in specialists in private equity. Maybe I'm going to invest in, stocks and bonds. Maybe I'm going to invest in companies, whatever it is, technology, you name it. Well, there's only so much time in the world. And if there's only so much time in the world, who has the time to go up the learning curve of every one of these hard assets? So I encourage people to invest in smart money.
Yeah, Ben, I have a mentor of mine that has, in a summary, he said there's a few phases in terms of wealth, your wealth journey or wealth career. There's the accumulation phase, the growth phase, and then the conservation phase where you're trying to keep it and defend it and not lose it, especially like you said, for multiple generations to come.
Right.
In this book, or in your opinion, does it actually flow in that timeline, or are there different detours that people have to take in their blueprint, in their
Well,
journey of wealth accumulation?
wealth accumulation, you're going to fail. You got to be persistent. You're going to make decisions. I say, show me your friends. I'll show you your future. Look at who you're surrounding yourself with. Build good resources and keep going. Keep being persistent. And that will hit your formula you're talking about. But throughout your journey, you're always defending. You're always compounding. You're always preserving. You're learning. You're growing. So you have to continue to grow as well.
Yeah, and like you said, if someone has $10 in their pocket, maybe they're investing in crypto or stocks,
Mhm.
something that's a little bit lower barrier to entry. But how do they get from $10 in their pocket to, having real estate and other private placement, private business investments? How do they get from $10 in their pocket to really building generational wealth?
Well, let's say you're younger and let's say you're an employee. You start pulling money out of your paycheck and start saving it and redeploying it. That's how you start.
Hmm.
Or you start your own business. And so you take your focus, and that's going to start building your hard asset empire. So if my focus is commercial real estate, that's how I started building.
Right. And it sounds like you have a fairly conservative investment approach and plan. So if someone is a W-2 employee and they've been dumping money into their 401k and all of a
Mhm.
sudden they have a decent sized 401k, how does someone go from that to diversifying into other asset classes?
Well, you can put money aside for other investments. You can invest through an IRA. You can invest in different vehicles. You can say, "Hey, I'm going to take $1,000 this year and invest it in a mutual fund or whatever you need to produce cash flow." You want to buy assets that produce cash flow, especially when you're younger.
Right, but you're not recommending self-directed 401ks
I
and
don't.
and
I
leveraging
don't.
against
Let
that.
me be very clear. I am not recommending any investment vehicle. That's not my job. My
Yeah.
job is to educate you on how to build a hard asset empire. I say focus on your niche. And so I don't make recommendations or warranties or expressions about investments. I know our investments. If you want to build wealth through commercial real estate, feel free. You can go to alliancecgc.com, click invest now, fill out the form, and you can start investing with us, which a lot of people do. But as it pertains to vehicles and how people need to do it, it's just really a matter of what's your plan. So I say surround yourself with a good attorney, good accountants, good advisors, and that will help you accumulate wealth.
And how does an investor that, let's say, they focused on stocks specifically until this point, how does an investor go about finding someone that's an expert like you or other people that are experts in their fields?
Well, I mean, we live in a digital world now. It's pretty easy. I mean, we're all over the place at Alliance. I mean, you can go to our website and start investing with us.
Mhm.
So you could Google and you'll find us. But as it pertains to book, if you go to benreinberg.com and you go to benreinberg.com/book, you'll learn all about us. You'll learn all about me. And so the social media and online is pretty prevalent where you can find different resources and investments. And you ask people that your advisor, what do you invest in? Where do I find resources?
In a digital and social media focused world that we're in, it is easy to access the information, but in
Mhm.
some cases it may be more difficult to verify that information
Right.
and know that the person or people that you are communicating with or planning to invest with are legit and have an actual track record that you can trust. What would you say to someone that, yeah, hey, I found someone that sounds like an expert. How do I verify that? How do I trust that what they're telling me is accurate and true?
Well, you gotta look at their track record. You gotta understand how they deal with challenges, how long they've been in business. You need to ask questions. So asking questions, like for us, we have 200 plus years of leadership team experience. We have a great track record. We've been in business for 30 plus years. So it kind of stands on its own. So when
Mhm.
you're younger and getting started and you're going to raise equity, you're going to have to immediately go to friends and family. You're going to have to go to people that know and trust and like you to start. And then you can go out to the masses like we do.
Do you have a question or a couple questions that limited partners should be asking people that they're planning on investing with?
I would say the best question is how you deal with challenges. That's the number one question. Anyone can pay a preferred return, but when the chips are down, how do you deal with it? Those are the people I'm investing in. That's why people invest in Alliance.
someone who's felt the pain a time or two and come out stronger on the other side.
Been through different cycles.
Yeah.
Has been through different cycles and has been through different deals. The more deals you go, the higher on the learning curve you are.
And are you able to, I know the book's not out yet, but are you able to share, it sounds like a fantastic book through and through, but are you able to share, one or two pieces from the book that you think will really connect with, we'll say, a newer investor?
Well, we talk about not over leveraging properties or assets that you're acquiring. And that's something we touch on in the book. And when you read the book, you can understand why that is, because commercial real estate is about the ability to hold, and how you do that. And the book outlines examples of why that's important.
That's very interesting, because there are plenty of people out there that a guy whose initials are GC will tell you, when you get capital, get rid of it, leverage your assets to keep growing and make sure that your new assets are covering your leverage.
Right.
I think a lot of people subscribe to that model of going fast and hitting the ground hard, but they fail to realize that there's a lot of inherent risk when you do it that way, instead of protecting your assets and defending your wealth.
Right.
That's interesting, because not many people, especially the newer people in this business or these investment industries, will tell you, hey, let's be conservative. Let's let time do its thing and stick to your plan. Everyone wants instant gratification, and they're trying to figure out, how can I get there faster?
Yeah. Well, that's why you need to diversify. You need to invest with smart money.
And know how to defend.
Yep. It'll always be the case. But building hard assets is the best way to build wealth.
Absolutely. Well, Ben, is there anything else you want to share with our listeners today, or where they can connect and learn more from you and your company?
Well, if they go to alliancecgc.com, alliancecharliegeorgecharlie.com, and they want to invest, they click on Invest Now, fill it out. We'll have someone reach out to them, and we'll qualify them if they're a good fit for what we do in our funds. If they want to learn more about me, go to benreinberg.com. You go to benreinberg.com/book. Pre-order a new book. We have thousands of people that wanted to order a book. It's coming out soon. And learn how you can build your hard asset empire. And follow me on all different social media platforms. Go to benreinberg.com. I'm all over the place on social media.
Very nice. Well, Ben, thank you so much for sharing about Alliance and your new book coming out. I will be on the list of pre-orders as soon as we're done with our conversation today.
Thanks, Trent. Appreciate it.
Thank you for listening to this episode of the Real Estate Professionals Investing Podcast on WIN, your community of investing knowledge for growth. We hope that this episode has increased your knowledge and added value to your path to freedom. If you would, please take a second to rate us so that we can get more great investors to interview. If you or someone that you know wants to be on, please visit westsideinvestors.com and fill out our form to be on the show. Thank you again, and enjoy your day.